We've actually seen some favorable decoupling from Bitcoin compared to, say, ARK stocks, right? So Bitcoin's less down than, say, many of the ARK stocks were, right? So that's kind of been a favorable decoupling, even though it's not been exactly bullish for Bitcoin. So I'm kind of neutral over on the next 6 months. I would expect volatility. Longer term, I think the fundamental picture looks great. The development that's happening on it, the use case. That kind of goes in cycles. So, for example, you had a broadening out back in the 2017 period as well during that bull market. Generally, bull markets kind of have these, the bull market in altcoins usually peaks after the bull market in Bitcoin.
Yeah.
And so even though now we're in a kind of consolidation, some of that more enthusiasm in the altcoin space was actually more recent than some of the enthusiasm in the Bitcoin space. So I think that contributes to the overall thing.
Yeah.
You have a lot of VC capital going into crypto. You have big name athletes in on it. But I also think the Bitcoin ecosystem is kind of its own thing, is also growing over time. So they're actually kind of in some ways separating, right? So you have kind of very different demographics in some way between, say, Bitcoin only versus the broad crypto space. And that funny thing is, I'm surprised by the speed with the inflation we got. I mean, part of it, when you add a war to the mix that was not necessarily anticipated by me or a lot of other people, or at least not at this time frame or in the scale, that certainly adds inflationary force to it. And so the Fed being more hawkish than expected, but if you look at, say, where inflation is and where rates are, in some ways they're the most dovish they've ever been.
That's right.
The biggest disconnect between rates and inflation since 1951. And so I think their clear mandate is to try to tighten. And the hard part for them is that they have a horrible track record of tightening into a decelerating economy, right? So if they tighten while PMIs are rising, they generally have a better shot of getting some decent gains there. Whereas if they're trying to tighten into a slowing economy, that's kind of the recipe for disaster. That's kind of when you ran into in late 2018. And so they're kind of running in that same environment now, but of course inflation is much higher. So I don't know exactly how far they're going to get, but I'm going to take the under on whatever consensus is for how far they're going to get. Even though workers are finally getting wages and unemployment is pretty low, inflation's higher than the average wage increase. So part of why it's so troubling is that on one hand you have an overheating economy, but on the other hand people are not really feeling it.
Yeah.
And so I think that we're starting to see signs of decelerate. Lockdowns in China complicate it. Europe complicates it.
Right.
All of that is a shock to the system. We were actually already rolling over back in 2021, and so Bitcoin has a tendency to kind of see these things coming because it's kind of liquidity. ARK rolled over. A lot of these things kind of rolled over, and you start to see PMI roll over. And so we are starting to see across the board, there's actually a lot of slowing indicators, despite the fact that at the very moment, certain other indicators still look hot. If you look at over the prior expansion period, right? So a decade-long expansion, you had like 3 mini cycles in there. You had rising, declining PMIs roughly on 3-year periods.
Yeah.
And so you had these slowdowns that did not necessarily result in recessions. This one's a little trickier because we do also have yield curves inverted for a period of time. Some percentage of the yield curve is inverted. So there are kind of more recession indicators this time, but we're still in that period where we're dipping. It's unclear if it's going to manifest an actual recession or if we're going to kind of dip and then have a rising period out of this. If you look at Atlanta Fed GDP now forecast, last I looked, they were looking at something like 1% real growth annualized for this quarter. So there are a lot of things that look slow. And I think as you look out maybe 6 months, the question is this kind of a valley and a higher growth thing? I don't think we have enough data to say for sure yet, but it's not looking fantastic. I think the inflationary pressures are deeper than that. I don't think the Fed's tools really, especially given how high debt levels are, that they really have the tools to properly fight inflation. I think it's more of a fiscal problem, and it's more of just how we've structured supply chains. I think that this is only going to be resolved by improving supply chains, improving commodity capex, kind of the real world changes, and those are not quick changes. But one thing I caution people on is that for example, I'm staying in the inflationary camp. Before the war, I was expecting maybe like a localized top in inflation. So we've obviously added fuel to that fire. But I don't really expect inflation necessarily to be a straight line.
Yeah.
I think that we're going to be in a very inflationary decade compared to the prior decade at least. But even I'm still anticipating eventually slowdowns in inflation. Maybe the Fed gets a handle of it for a period of time. but then they end up having to loosen because they go too far, you have a recession, and then they cut, and then you get another round of inflation.
That's right.
So in the 70s, you saw multiple rounds of inflation. In the 40s, you saw multiple rounds of inflation. These things tend to come in bursts. Until about a month ago, my answer would have been that I see kind of inflation maybe sort of peaking out around here, at least locally, despite the fact that I still had a long-term inflationary bias. I was kind of, setting expectations to maybe start stabilizing. The war certainly added a lot of complexity to the mix. So now, part of an inflationary outlook has to be like, what is Putin going to do? What is Europe going to do, right? So there's this huge amount of variance. I think I'm going to stick to my view that we're going to have these pullback periods, either due to central banks trying to tighten and kind of putting us in a recession, or just, supply, oil opens up again, oil price kind of stabilizes, you kind of get a period of stabilization in inflation. So I think inflation's here to stay longer term. I just don't have a high conviction about, say, any 6-month period because that's kind of a geopolitical question.
Right.
But I'm bullish on Latin America for the most part. I'm bullish on gold, I'm bullish on Bitcoin, basically that kind of more commodity-oriented space, as well as the value stock space. So, for example, in this kind of recent market turbulence, you've seen healthcare stocks hold up pretty well. You've seen energy pipelines hold up pretty well. They're less tied to the energy price, and so I like assets like that, real assets and value assets. Things that we're seeing now. So, for example, the dollar index is going up; it's very strong.
Right.
But there's very a lack of breadth to it. So, for example, it's more about that the euro and the yen are being very weak right now.
Yes.
So, for example, if you compare the dollar to the yuan's actually been strengthening relative to the dollar over the past year or so. There's a huge divergence between dollar yuan versus dollar index. And the same thing, if you look over, say, year to date, the Brazilian real's doing great as far as emerging market currencies go. So really, the dollar's not been particularly strong versus many emerging market currencies. It's mostly against those big two, developed markets. And so I'm kind of neutral on the dollar indexes overall, mostly because Europe has an acute energy crisis. Japan also is doing formal yield curve control, and so those are very currency negative. But I'm not particularly bullish on the dollar as it relates to emerging markets, which is why I'm somewhat favorable towards a number of emerging markets. Okay. Now every country in the world knows that sovereign bonds are not the best store of value if you want to have your country be as independent as possible. So I think we're going to see increased interest in gold, increased interest in reserve diversification. We've seen Brazil, for example, they're increasing their yuan weighting, which makes sense because it's their largest trading partner.
Yeah.
So they've gone from virtually zero exposure to the yuan.
Right.
They've increased it to something like 5%, from a low base.
Right.
They plan on continuing to increase that somewhat.
Okay.
I think we're going to see a spreading out of this and kind of a less focus on the dollar-centric system, even though network effects of that size don't just unwind overnight. 6 months, very uncertain. Right, because historically, if you look at rising and falling PMI environments, most of Bitcoin's bull run activity occurs during rising PMI environments.
Yes.
So you have favorable liquidity, you have risk-on behavior. Bitcoin tends to do very well.
Yes.
In declining PMI environments, that's when Bitcoin has historically suffered.
Right.
But what's new is that Bitcoin's never really encountered a stagflationary environment in major developed markets.
Yes.
Right. So that's a whole new variable. I certainly would rather own Bitcoin than some of these companies that have tons of supply chain exposure, margin pressure, things like that.
Yes.
So we'll see if it starts trading like a commodity, like a monetary commodity. We've actually seen some favorable decoupling from Bitcoin compared to, say, ARK stocks, right? So Bitcoin's less down than, say, many of the ARK stocks were, right? So that's kind of been a favorable decoupling, even though it's not been exactly bullish for Bitcoin. So I'm kind of neutral over on the next 6 months. I would expect volatility. Longer term, I think that the fundamental picture looks great. The development that's happening on it, the use case for it couldn't be more clear. Especially, you have people fleeing from Ukraine, and ones that are self-custodying Bitcoin, they have some of the easiest time in terms of bringing wealth with them with the least hassle. Seeing, for example, Bitcoin circling back to its original kind of intentions being used for payments.
Yeah.
And Lightning is a layer on top of Bitcoin that makes it way faster.
Correct.
And it's still, varying degrees of decentralized. Right. Maybe not as decentralized as the base layer, but it's some of your trade-off. And you get super fast payments. And now we had an announcement, for example, for stable coins that can be natively issued on Lightning potentially. So a lot of development in that space that I think is really interesting for the payment industry and could disrupt some of the major players.